Trading Man here. Tonight going to go over Apex Trader Funding because I have earned another funded account with them. About a year ago, I did a video review. You can check that out if you want to get a more in-depth review of them. That was back in August of 2022, I believe. That was a 50K account. This past spring in April, I passed a 150K evaluation. And this time around, we have a 50K evaluation that I began in August and just passed here in September. And with this one, what I did was a strategy I've been developing that involves using Fibonacci as the base, like I typically do, but adding Heiken Ashi candlesticks as a way for confirmation to get into the trades and then eventually trail these trades as well in some cases. So I'm going to go over Apex Trader Funding, a couple trading examples, one from Monday that actually earned my funded account, and then one from today that worked out fairly well. And then we're going to talk about the trader and things like that. So starting with Apex, they've become more popular, I think mainly because of their discounts. They give you 80% off, 90% off, in some cases recurring to take an evaluation, which is way cheaper than other competitors out there. We can see even right now they're offering an 80% off evaluation right now for the next week, it looks like. You can see all their rules right here. Minimum trading days, as little as 7 days. Most require more. You can trade during news. A lot of other firms do not allow you to do that. You can trade up to the max size, which I would be very cautious about. I wouldn't rush into these evaluations or these funded accounts and trade your max position size. I think it's a quick way to get blown up. But they do allow that, which most firms, again, do not. And you can also trade multiple accounts, which a lot of firms don't let you do either. They have multiple account sizes going from 25K to 250K. You can see the different prices, but with that 80%, 90% off coupon, it becomes very cheap. The evaluation that I did was like $35. And for me, it was $35 to prove that the strategy I was doing could earn a funded account. Because in my trade room, that's what I try to teach, is strategies that can earn you funded accounts. So going over now to the charts, let's talk about some of these trades. So looking at Monday, this is going to be the NASDAQ. So with this evaluation, I primarily traded the NASDAQ, crude oil, and occasionally gold, but it was really just NASDAQ and crude oil. So looking at the NASDAQ, what I do with this strategy is, again, I'm still using Fibonacci as my base. But what I'm going to do is go to the tick chart, and for the NASDAQ, I'm going to use a 512 tick chart. If you are unfamiliar with a tick chart, it measures every transaction or trade happening in the market. So instead of being time-based, it is trade-based, volume-based. So every 512 trades or transactions, there is a new candle being formed. Now, for the NASDAQ, we had a 50% long for the day. This is a full intraday 50% long in the NASDAQ. Now, what I'm going to also do is go to Heiken Ashi, and sometimes these setups just don't work. They just fail and they break. And an example of that would be the full 50% short. You can draw a short here, high to low. You can see it does get a reaction, but ultimately this setup fails. And so how can we avoid these potential losers and give ourselves an edge? Well, using this strategy, what we're going to do is, just like we always do, draw our Fibonacci levels. And then we're going to look to Heiken Ashi for a confirmation to get in. And for what I do, I want to see the Fibonacci level trade, and then I want to see a reversal of color. So we have these red candles coming into the long setup here. And if this turns green, I'm going to look to get long. And there's a couple ways I can get long now. So we go red to green right here with this candle. So one option would be to be aggressive, enter immediately on the next candle. And then we're going to place our stop either beneath the lowest red candle in that move, or we can use the 6180. And if you're going to be that aggressive, it might be worth it to do the prior candle because of the risk reward. That will give you a better chance of hitting a target and not having to risk as much. But what I like to do is the other alternative, which is waiting for the 50% level to become tested again, a retest. So I place my orders at 385, and then I'm putting my stop just below the 61.8. And I'm looking to go for 2 times my risk. So it's about 16, 17 point stop, and I'm trying to then get 32, 34 points out of the trade. So because of this confirmation, we do end up retesting this level, and I get long for 85. Now, we end up actually heading lower, and we almost get stopped out. But what happens is we turn green again, and what I found with doing the strategy is that if you make a new low, in this case, because you have a long setup, if it were a short setup, it would be a new high. But if you make a new low, and you reverse the color again, it could actually be a signal to add into this position. I did not do that because it was a small account size, and I think that until I grow that account to a larger size, it's just not worth it risk reward wise at the moment. It could really blow up in your face. But I just want to point that out. So when I see this turn green again, I actually get confident that I might get the run I'm looking for, and I end up getting 40 points out of this trade. I exit then at 425. And the reason I chose that exit was because if I got a little bit over 40 points, I would then get funded. So it was a little bit more than 2 times risk. I think it was like 2.6 times or 2.65 times my risk, which is really good risk reward. And that earned me the funded account then on Monday. That actually ended up becoming retested and routed to its target later, but that's just one example there in the NASDAQ. And again, we're still using Fibonacci, that's the main piece, but what we're going to add now is Heiken Ashi, and we're looking for that reversal of color there to confirm an entry to go long. And again, you can enter immediately after that first green candle, or you can wait for a retest of that 50% level. And I like to wait for the retest because the risk reward is better, and that's just me, but that's just my preference. So now what I want to do is go over an example in oil. And this is going to be from this morning. We're going to go to a 233 tick chart. So instead of being 512 trades for every candle, it's 233 trades or transactions for a new candle. And what we have in oil is a 50% long that traded here at 89.47. I did not have this trade, but you can see how this strategy could actually earn you some good profit here. And then we're going to look for the full 50% long in oil. And they had inventory this morning at 10:30 a.m. Eastern Time. That release basically led oil lower into this full 50% long on the day, 89.78. And what I noticed was we nearly traded that level, and then we turned green. And there was an option to get long in that moment. I decided to wait and just see because I felt like we could move lower. And it's about 25 ticks or so, or yeah, about 20 ticks from 50 to 61.8. So I just wanted to wait and see how this formed. We ended up having a double bottom. And this goes back to the Earn to Trade video where I only did reversal setups to get funded. 50K account, same idea, just one contract, and just doing reversal longs and reversal shorts to get funded. And that strategy kind of came back here, but it's very similar where we're still using Heiken Ashi, we turn green, there's an option to get long immediately on that next candle, and again, put your stop in below, you could do it that way. I decide because it's a double bottom, if we break above this would be lower high, I could then look for a reversal 50% long. And that actually did come into play to the tick. So you can see 89.88 came into play to the tick. That reversal strategy is covered more in depth in the Earn to Trade video and all over the trade room, but I just wanted to point this setup out. It was a really nice setup. So I was risking about 10 ticks, not even 10, it was like 8 ticks I was risking on this trade. And then I went for 16 and I got it. Obviously, it could have been a lot more of a trade here. It actually ended up running to its target, so it would have been wild to risk 8 ticks to get over a point. That would be over 10 times risk. But only one contract, and I just wanted to exit at these targets, basically. So that's all I did, I just exit there. But you can see how it could be a strategy where if you have multiple contracts, you could really scale it to a bigger target. And that's what I'm very excited about with the strategy. And with this funded account, that's going to be my plan, is to basically do what I've been doing, get to about 55, 57K in that account, and then basically start adding more contracts to these trades and then just try to scale it just like this. And what I would probably do in this situation is trail it by higher lows. So then I would just go off of these pullbacks. Once we make a new high, I would just put the stop beneath the prior low. And so if you do it this way, for example, with this trade, then you can see that you have a pretty nice run, and you might get stopped out here at like 90.60. But that would be a 70 tick run, risking 8 ticks. So you're getting almost 9 times your risk there, over 8 times your risk, which is obviously really, really good. So that would be the idea when I start scaling with these types of trades. But those are a couple examples. And again, actually, I didn't have this trade, but I'll cover it. You complete the target, take the same setup to the new high, you trade this 50% long, and guess what? You flip green. You could go long here, and you end up having a nice run. You also have a reversal long opportunity because you break above this prior lower high. You can draw the 50% long, put the stop around the prior low, or beneath the 61.8. You want to typically have a 10 to 15 tick stop when doing the reversal. So if you enter at 90.20, you probably want to have a stop at 90.10 or 90.05, and your low's 90.12. So you'd still be in the trade. Or if you want to have more comfort and know that if you're only going to get stopped out if you're wrong, you could put your stop at the prior low, which is 90.02. So you'd be risking about 18 ticks there. Regardless, you're going to make 2 times the risk and maybe even more on a trade like that. So really good setups all around in oil today. I was out getting a haircut, so I didn't have that trade. But it is what it is. Plenty more opportunities to come. So those are just a few examples of using the Heiken Ashi with the Fibonacci strategy there. If you go to FibonacciForecasting.com, we just launched this website, and me and another admin are in that trade room, and we are going over these strategies and helping traders earn funding. That's just the main goal of the trade room, is to basically teach strategies that have earned us funding. And so if you go to FibonacciForecasting.com, you can go to the trade room and read more about it and see what is included in that. And if you go there, because this is new, we're doing a discount right now. If you do the promo code FALL23, all caps FALL, FALL 23, FALL 23, you will get $50 off. So instead of being $149 as a one-time payment, it'll be $99 as a one-time payment, and then you can join our trade room, which has plenty of members in there talking about trades that they're looking for and strategies they're using and things like that. Primarily, again, using Fibonacci. There's a learning videos and a learning documents channel, which is the main reason people join. There's over 7 or 8 hours of educational content in the form of videos that go over all these strategies I've used to earn funding. There's learning documents as well, which are trade examples. There's slideshows that go along with some of the videos as well, including the reversal strategy. I'll probably make a slideshow as well for this Heiken Ashi strategy now that it's performing well. And we also have live trading twice a week. Technical levels are sent out every single morning using, again, Fibonacci. The other thing that we have that is free is if you go to our homepage, or if you go to the More section and click blog, you can find our market analysis every single morning, and we will basically just report a larger time frame analysis on the indices, the VIX, crude oil, and gold and silver. So that is just free. You can go to the website, and then if you subscribe, you'll have this sent to your inbox every single morning. But otherwise, that is all I got for tonight. If you like the video, please leave a like. If you are not subscribed, please subscribe. It really does help the channel a lot. And I hope to see you guys in the trade room. But if not, I hope you can earn a funded account. And just, if this helps, great. But I will catch you guys in the next video. So have a good night. Take care.